All right, shares of Robinhood pulling back a little bit today. They posted earnings last night, and as far as the pullback, listen, talked about it already in this show. Kind of par for the course this earnings season, particularly for names that have made significant moves in 2025, and none have made more significant moves than Robinhood, the #1 percentage gainer on the S&P this year. And by the way, I think the quarter was remarkable. Robinhood, growth by product. Options were up 50%. Crypto was up 339%. Equities up 132%. Interest up 66%. And the company also gained market share across equities. They gained market share in options. They gained market share in crypto. They gained market share in margins. And additionally, Robinhood now has 11 business lines that generate more than $100 million annually. So I'm going to bring in now Robinhood Chairman and CEO Vlad Tenev. Vlad, congratulations. 1.27 billion beat consensus on the top line, 61 cents beat consensus on the bottom line. What's driving this? How did you garner this much momentum? What are you attributing this success to?
Great to be here, Charles. I think it's just the continued relentless product velocity by the great team that we've had. And I think it's not just existing products that are gaining market share, as you pointed out, but we're also at the leading edge of integrating new capabilities. We've got an AI event coming up in a few weeks where we're going to announce even more. And brand new products that are continuing to roll out, like prediction markets, tokenization in the EU, and Robinhood banking, are relatively early in their life cycles. So we don't think it's just about growing market share in the existing assets that are mature, but also we've got a roadmap of new products coming out that'll all further our goal of being people's primary and secondary financial account.
I want to go to your margin book because that more than doubled from a year ago. And it's a clear reflection, obviously, of your relationship with retail investor and retail investor enthusiasm. Old school Wall Street, though, of course, sees this as a red flag. And this is one of the reasons you're hearing all these folks go on TV. Well, the market's overbought. I mean, what's your feeling? I mean, you're connected now with the retail investor more than anyone else. Is that something that you feel is an adequate interpretation of this?
I think that in and of itself, margin can't be looked at independently. You have to look at it as in the context of the assets on the platform. And the assets on the platform are up to $1/3 trillion, which has been tremendous growth. And so margin as a percentage of assets, still a single-digit percentage. And it's just a story of the platform as a whole has continued to increase. And, you know, margin, frankly, more than a year ago, we weren't very competitive with our product, but we've made so much progress on our risk management infrastructure that we started competing on rates. We could offer low rates profitably. And to my knowledge, I think we've got the most competitive rates across every tier of all the retail brokerages. And I think that really drove the increase in market share. And I think that with shorting coming online, we see more tailwinds than headwinds.
Average account size, this is what I've read. I mean, if these numbers are spot on or not, but Hood, 15,000, Interactive Brokers, 183,000, Schwab, 253,000. Schwab bought a private equity firm, right? And it just feels like maybe a lot of people think that this is maybe to your advantage. That your growth is tied into younger investors, and as they grow and they earn more money and invest more, it will be reflected mostly with you as opposed to your competitors. Your thoughts on that?
I mean, certainly you look at Robinhood's business now, we're at $1/3 trillion in assets, and that seems like a big number, but it's a drop in the bucket compared to what's happening in the next few decades. We're in the early stages of the great wealth transfer, where north of 120 trillion are going to be passed down from older generations to younger. And we're on top of this. We think we can be one of the main, if not the main, beneficiary of this. That's why we're focused on building amazing financial tools for the next generation, and really tools for the whole family. If you look at our credit card and banking offerings, it's really the first, to my knowledge, that makes the family an integral part of your financial experience. So you can get cards and savings accounts for your partner, for your children, for household staff. And I think as that rolls out more broadly, it'll become the standard for family finance across generations.
You mentioned some products earlier. Let me ask about, is it too early to start talking about the impacts to the bottom line? Predictions market, the international expansion?
Yeah, so prediction markets have been growing very quickly, and the impact to the bottom line is significant. You mentioned yourself, we now have 11 business lines that are north of 100 million in annual revenue run rate. Prediction markets being one of them, and Bitstamp, which is our first institutional business, being the second. Now remember, prediction markets only rolled out about a year ago with the launch of our presidential election market. So this is also the fastest product line that we've rolled out to get to 100 million in revenue. And it's still very early. Like we think prediction markets, many believe, not just us, that could be one of the largest markets ever for both institutional and retail traders. And so I think we see a lot of growth potential ahead there.
Speaking of growth potential, the crypto market for you absolutely exploded. Some recent weakness in crypto. Your thoughts on that? A lot of folks are saying, man, you know, it's interesting because gold keeps taking off and crypto, particularly Bitcoin, not. Anything to be concerned about?
I don't think so. I mean, I think that the market will go up and down, and the macro environment is one that is sort of multifaceted. We can't control. But if you look at what's happened between the end of 2023 and today, crypto has grown tremendously from 1 trillion market cap to multiple trillions. And I think there's more tailwinds than headwinds there. Not just for the spot native crypto assets, but also when you take into account tokenization. I think you're going to see a lot more traditional financial services on blockchain. They're going to be written as smart contracts on the major layer ones out there. And so I think crypto is going to continue to be infrastructural. Mm-hmm. So at some point, you'll just stop talking about it. It'll be one and the same with the traditional financial system. It'll be like how we don't really talk about cloud services and the internet anymore. It's just right. Any company every company of note is a technology company. I think it'll be the same for financial services and crypto.
Vlad, the way I interpret this market this year and the performance of your stock, coin, and a couple others is a changing of the guard, so to speak. I think the market's sniffing this out. You know, these large financial companies, they had these giant moats around their business. I think the market is saying that you are positioned to be a leader, in part because of the Bitcoin offering and these other things that, to be quite frank, that these other folks have ignored. Before I let you go, I'm still intrigued by the notion that at one point maybe people will trade for a living or be able to, particularly as we're learning that AI taking more jobs quickly, faster than we thought it would.
Yeah, so I think that, somewhat counterintuitively, there will be actually many more jobs created as a result of AI. I think they'll look different. Certainly there will be large-scale job disruption, but I think there will be millions of new jobs created and new job families, and it'll look very much like an explosion in entrepreneurial activity. If you're looking at the power and the leverage that these tools give to individuals, it's like having a world-class staff at your disposal. And I think that'll create much more entrepreneurs. Right. Now, there is a chance that I'm wrong, right? There is a chance that I'm wrong. And even if I'm wrong, you're going to want to be invested in the markets because, you know, in a world where the impact of AI is centralized, you're going to want to be invested in those companies. In a world where it's distributed, you're going to want to learn to invest at an early age because there will be just a plethora of opportunities across privates and publics available to you.
Well, I got to tell you, early age is the thing here. You've gone through some ups and downs, some learning curves, and so far you've come out on top. So I appreciate the time you've taken with us. Thank you very much, Vlad. Appreciate it.
It's a long journey. Happy to be here.
Yeah, thank you.